Welcome to the Big O Money Show. I am Andrew Galvin, filling in for your normal host, Bill Altman. And with me today, as usual, is Tony Shore. Tony, how you doing?
Well, I'm doing great, but let's put normal in air quotes when if we're referring to Bill Altman.
Yeah.
I love that our normal host, Bill Altman. It's like, yeah, jury's out on that one.
Right.
Great. You're not off to a good start today,
I
Andrew.
know. I'm gonna
Referring to Bill Altman as normal.
we're gonna have to hit re-record on this one.
No, we're not. That's good. No, I'm just giving Bill a hard time because he's not here. He's stuck in a snowbank somewhere. Actually, he's probably scooping out his neighbors.
Yeah, we got
He's
some
out
snow this
plowing.
week, so that's good. We kind of have needed it actually around here. I don't know about you guys. I heard you guys have been buried in snow up there.
We haven't actually we haven't had snow in a while, but we've had record cold temperatures.
Snow sticking around.
Last Friday, not this past Friday, but the previous Friday, I woke up and it was negative 24 degrees in Stillwater, Minnesota. That was the actual temp. The wind chill was over 40 below zero.
That's cold.
And when we opened our front door, my face hurt instantly.
Yeah.
Yeah. I mean, weather that how can you live somewhere where just opening your door makes your face hurt?
I know. We're made of for stuff here in the Midwest, Tony. It's just the way we roll.
Yeah, and I guess we can't act like it's a big surprise. Like it's Minnesota in January. That's all it is. I mean, it's not anything special, really. But we have been cold. We've been in negative temps for over a week.
Yeah.
But this weekend we're supposed to hit the weekend you're hearing this 24 for a high, which is as warm as we've been in weeks.
That's basically balmy. I mean, you can go outside shorts in that.
That's short pants. Yeah, I was just going to say I'm going to break out the short pants for that weather. But seriously, it's been crazy here. How much snow did you get there in Omaha?
So we got a dusting. We've gotten a couple dustings over the last week and a half or so. I mean, nothing substantial. I personally would just love it if we got 6 to 10 inches.
Oh, sure.
I love that. And Bill would love that too. He would love to be out there.
Yeah. Bill's hoping for a blizzard. You know that. He loves getting out the equipment and moving snow and helping the neighbors. He lives for that. Right.
Yep. He's a good guy. So
he is a good man. And that's what's great about Bill Altman. One of the many things, and we were talking about how, he is so great at off the cuff, and that's why he has a popular radio show. Is just you and I were like, hey, let's do some show prep. And Bill's like, Bill, what are we talking about today? And he goes, we'll see. Hit record. It's like, wait, what? Yeah, he's great. So how have things been going at Premier Advisories?
It's been good, Tony. I think it's been about almost a month since I've been on the show. So it's great to be back with our listeners and great to be back with you. And obviously we had our trip at the beginning of January going down to Scottsdale, hearing from our industry experts.
It was great to see you there.
Yeah. And then since then, business has been steady this entire month. I think January and December are technically slower months in the industry just because you're kind of ramping up from the holidays, but it hasn't really seemed like that this year. And so that's been great. I like staying busy. I know Bill likes staying busy. All the people here, are cranking. So it's been good. And then obviously we've had a bunch of different things going on in the market. We've had Fed talk this week, Fed meeting. So let's dive into that, Tony. I mean, it sounds like they're committed to keeping those rates kind of where they are for, at least the foreseeable future.
Yeah, that's interesting because there's so much pressure from the president and the current administration.
Mm-hmm.
So I know a lot of the politicians out there, and I think maybe some on Wall Street, there's some pressure to lower rates even more.
Yep.
But right now they're pushing back and they're saying, no, we're not going to be pressured into lowering rates. We don't feel it's needed right now.
Yep.
And basically, if they don't feel like they need to move rates lower or higher, that typically is a good sign that the economy is doing well. Usually the only reason they make a rate move is because they need to adjust it because of something happening with the economy.
Yep.
So there's good and bad with it. Obviously, for those of us who want to relocate and sell our current homes, like my wife and I would like to do,
Yeah.
and buy a new house, and those in real estate, like Danielle Altman,
Yeah.
that we want lower rates. And I know that Wall Street, the markets,
Market. Yeah.
yeah, it helps the market to get lower rates, and I think that's why the president is pushing for lower rates.
Yeah.
But you know, the head of the Fed is still Jerome Powell, and that's going to change in May.
Yep.
So I think between now and May, we may not see any rate lowerings, but
Yeah.
you never know. Something could happen that could trigger them to lower the rates, right?
Always a black swan event potential, right? There's always that potential that something happens. But I think you're right on a couple of things there, Tony. You know, no one's really surprised. I think Powell's been telegraphing that he thinks rates are where they should be. There were two dissenters this time, but it was interesting because one of those dissenters was somebody who had been basically advocating for a 0.5 percentage point cut. And this last dissent, he said, maybe more like a 1/4 point cut. And then the other individual, you know, was pretty spot on with that 1/4 point cut. I would guess if I was a betting man, which not really a betting man, but if I was, I think probably that June meeting is really where you'll see those rates being adjusted, right?
Yeah.
And I think the market is pricing in 2 cuts, they've said this year. And both of those are they're thinking they're probably going to be 1/4 percentage point cuts. So June, September, maybe July, you know, and as we get into the end of the year, I mean, just who knows, right? A lot can happen in 12 months. We're only at the end of January.
Right. And no one has a crystal ball, right?
Exactly. So they obviously are going to address that as they see fit. And here's the thing, Tony, at the end of the day, it doesn't really matter what we say because we're just here in Omaha, Nebraska and Stillwater, Minnesota. They don't call us up, right, to ask for our opinion.
Well, speak for yourself. I get
How
I have him. I think he has me on speed dial. No, of course not. Obviously, yeah. We're not involved in that. The Fed is it's an interesting group, and it seems like it's talked about like it's this mysterious, very powerful group of people that meet in a dark wood paneled room with leather chairs, and they're all sitting around deciding the fate of our economy, which may be closer to the truth than we think. But yeah, we'll have to see what happens. So Fed and interest rates, it's good to stay on top of that. I'm glad you mentioned it because they did decide not to lower them this last go round. And I think we're like we said, we may only see a couple of changes to the rate this year, and it's probably not going to happen until after May sometime, June or July.
And for savers, I mean, you know, the negatives are, you know, maybe the market doesn't respond as positively. People that are shopping for a house the beginning half of this year are probably going to be a little bit higher rate than if they waited. But silver lining to that is our retirees and people that rely on that fixed income part of their portfolio, or individuals that like CDs or money markets, they can still get a little bit of yield or a little bit of interest on their money. And I think that's incredibly important to remember. I mean, it's not like keeping the rates here is all bad news, right? So it's all about looking for opportunities, you know, and so that's something that we always address with our clients when we do meetings, we do reviews. You know, hey, it's beginning of the year. Do we need to make any adjustments based on this interest rate environment? There's opportunities with, you know, potentially annuities, MYGAs, fixed index annuities. Our fixed income portfolio right now is yielding, you know, 4.5%. Will it stay there if the rates come down? Probably not. but even like money markets and things like that. So we have all the tools for individuals as they're looking for those opportunities. If something like this is something that you've been meaning to reach out to somebody about, give us a call, 402-557-6730. Talk to Justine, get on my calendar, get on Bill's calendar. We want to sit down and help individuals take advantage of these opportunities while they're here, because when those rates do come down, and I think they will eventually, that might not be something that we can necessarily do at that point. Now, there'll be other opportunities, Tony, right? I mean, there's other things that we can do in that lower interest rate environment. All of a sudden, value stocks that pay dividends become incredibly attractive. If you're getting 2% on bonds and a stock portfolio paying a 3% average annual dividend yield is out there, I mean, that's a good deal, right?
Yeah, that's a no-brainer, right? And as they say, and what you're talking about there, just for our listeners, the importance of figuring this out for where you're at is, what do you need for safety and for growth and risk? And so, like you mentioned, some options there where, hey, 4.5%, but your principal's protected, or you get downside protection, and so that could be huge. But the rates really do play a part in what's offered, and so I think it's a good time to get a second opinion on your portfolio or where you're at overall.
Yep.
Especially as you if you're getting closer to retirement or in retirement,
Right.
get a second opinion on where you're at. Or maybe you haven't had a first opinion and you need to get a financial plan in place, or a retirement income plan.
We haven't even done step one yet. Yeah.
Yes, exactly. So, and I think that's a lot of folks out there. I was in that position at one time where, people are saying, get a second opinion. I'm like, well, other than my own self, I haven't had a first.
Yeah.
So yeah, it's really good to work with a trusted financial services professional, and you and the team there at Premier, that's what you do. And you cover everything from healthcare needs to taxes to retirement income planning, portfolio investments. I think that's very helpful.
Yeah. Yeah. So, give us a call. Like I said, 402-557-6730. Tony, what else happened this week? We had some earnings. We had the Magnificent Seven kick off some earnings season.
Earnings reports. Yep.
And it sounds like Meta came in pretty high. They had some great revenue. They're spending, I think I saw $128 billion on AI and data centers and such.
I need to get in on some of that. Because that's real money even to you, Andrew.
I know. Yeah. Well, and it's funny because, I think maybe 4 or 5 years ago, I was talking to a client and I said, they said, should I sell Meta? Like, should I get out of Meta? I mean, how much longer can they just sell ads on Facebook? Like, is that something long-term that's going to be profitable? And I was like, well, I mean, right now it still looks pretty attractive.
Yeah.
But I don't know what their long-term plans are. And funny enough, that was right as kind of the pandemic was happening and we were coming out of the pandemic. And that's really when they started to do that pivot over to this AI data center push. And I mean, if capital expenditure is any indication, I mean, it seems like they're thinking they're going to be able to create that revenue from that expenditure. So that's good news for stockholders, right?
Yeah. Oh, it's great news. And what's funny is I remember it might have been 2-3 years ago now, where you started to hear rumbling where who's the Facebook guy, Bezos?
Zuckerberg.
Zuckerberg. Yeah, Zuckerberg.
Yeah.
I get those two guys confused. Amazon, Facebook, whatever. But I remember him alluding, Facebook isn't going to be a viable company for long.
Yeah, he kind of even was thinking that.
No, he goes, that's not going to be viable. But what he was doing is he was hedging, like then he started really poo-pooing his own company, but then they became Meta, and it was Facebook is just like this tiny little, that's a little side thing that they got them going. Now it's AI, it's Meta. I mean, it's so much more. And the focus is there, but we saw that, people looking at it, people were like, oh, we got to get out of Facebook or Meta, because he said it's not going to. Now, he was talking about just Facebook revenues. He
Yeah.
wasn't talking about his future for the overall company is
Right.
expanded into a whole other company and that area.
Remember that, the metaverse? He was talking there for a while.
Yeah.
And that didn't pan out. I think they pretty quickly shifted from that to AI data center growth is probably a better investment for us.
But you know what? I think that ties in. I think we're still going to see the metaverse, and that's
Just in a
because, well, because he sees AI as I think they see AI as just a path to that.
Yeah.
I think that's what AI becomes, and I think Meta's. Yeah, I mean, we're not giving individual stock advice, but
No.
I mean, and I could be totally wrong. They could be bankrupt tomorrow, but I think they're got some sharp minds over there, and I think they're looking ahead.
Here's the thing: college dropout ended up running a multi-billion-dollar company. I mean, you got to think that he's knows at least something of what's going on.
I hope some of these guys do. You know what I mean? Zuckerberg, Bezos, Tim at Apple,
Tim Cook. Yeah. Apple earnings are on deck this week. That'll be an interesting one.
That will be a really interesting one because they've struggled a bit with AI.
Yeah. So we'll see what happens there. Microsoft came out with earnings. And that's another interesting one because you think, well, what was Microsoft known for? Kind of similar to Meta, right? It was Facebook, and now it's AI data centers. Well, for Microsoft,
Windows 95. That's all I know about Microsoft. Word,
computer,
Word, and Excel.
Yeah, the applications that run on those personal computers was their big thing.
Yeah.
Now it's cloud infrastructure.
Yep.
And that came in a little bit more muted than I think people were expecting.
Yeah.
So there was a little bit of a sell-off in Microsoft this week.
Yep.
And again, it just goes to show, Tony, because I know we're not talking about individual stock advice, right? But if you're just invested and you've been invested in the Magnificent Seven, are there opportunities out there, right? Taking advantage of the current market environment. If you stayed there, I mean, you would have done well from 2015 to 2024, 2025. But are there other opportunities?
You would have done great if you just had that during that period. There would have been times where it would have tanked, but if you stuck with it.
Yep.
I mean, we've had 3 years of record highs carried by the Magnificent Seven. And, there was a time for a while when I was calling it the pretty good 10 because when they were down and there was like, okay, now it's 10 stocks carrying, but they're all lower than they have been. It went from the Magnificent Seven to the pretty good 10, and that can happen again, and it will happen again.
Yeah.
But
there always is.
It's just time in the market.
Yep.
You and Bill are always telling me that, Andrew, time in the market. And so earnings, though, it is important. I know you guys, especially for you guys, and you work with a company that has over almost $10 billion of assets under management, and they're actively managing portfolios over there at Gradient Investments. And you guys stay on top of these earnings reports.
Yeah, we've got to. I mean, you got to talk to clients about it, kind of make sure they're feeling okay about investments. And we've got Mike Binger. He's been on the show several times. Keith Gangle, a 2-time Lipper Award winner.
Yeah.
For those that are like, well, what's a Lipper Award? It is the top award as far as
it's like the Heisman Trophy for portfolio managers, basically.
Exactly. He's won it twice.
Yeah, that's crazy. Yeah.
So
he's a sharp guy.
And he's such a nice guy too.
I mean, you guys can call him up. You've got his cell number. You can pick up the phone. You and Bill call him up. Call up the president of Gradient Investments and say, hey, what's happening with this? And you guys can brainstorm. And that's where the difference lies in that these funds are actively managed. And you say, well, somebody's managing my funds that are in my 401k. Not like this, not on a day-to-day personal basis. They're not getting to know you and your goals and changes in your life.
And I tell clients too this, Tony, I say the 401k is great because it's that set it and forget it. Right?
Oh yeah. Yeah. You need the 401k. I'm not saying that
in your earning years, but as we get into retirement, it can be very important to actively manage because we can't afford, 25% swings on your retirement account
Yeah.
if you're starting to take income from it, right?
Yeah, I mean, if you're 10 years or less out from retirement, like if you're gonna retire in your 60s and you're 50, you gotta start looking at, okay,
59 and
let's
a half.
I at 59 and I turned 59 and a half last year. I'm gonna be
Oh, did
60
you?
this year. Yeah. I'm gonna be
Wow.
60 years old this year. Can you believe
Tony,
it?
you don't look a day over 45.
That's what people tell me. And then as they walk away, I hear a chuckle. Why is that? No.
I
You
don't
know what?
I
You
don't
know
buy
what, Andrew? It's my immaturity. It throws people off.
Yeah. Well, it's
Anyway.
healthy, clean living, Tony. I mean, the
Yeah,
Minnesota
clean
Stillwater
2
Minnesota
words, clean living, or diet and exercise, as I always say. 2 words, diet and exercise. So at any rate, my point is I turned 59 and a half, and of course I get a call, I've got Altman calling me, Jeff Foley calling me. Hey, you're 59 and a half today. And I didn't even know it, but it's time to move that money. And the markets were up when I turned 59 and a half, and it was the right time for my goals and my wife and I's goals.
Yeah.
And so, it was time to move my money into an IRA
Mhm.
where they could be more actively managed,
Yeah.
right? And
Yeah.
that's where my money's at, Gradient Investments being actively managed
Yeah.
with brilliant minds like you and Bill and Keith and Binger, those guys. It's great to know that people know my personal goals, and that's what you guys do for the people you work with. And I hate to even call them clients because I've been to your events where you have people you work with, and it's like a big family. Yeah.
Yeah. Now, one other thing I wanted to mention on this show, Tony, and we're almost out of time here, so I want to switch gears really quickly. Um, it, if you've looked at the price of gold, silver recently, we get a ton of questions on it, right? People are like, should I buy gold?
It's going through the roof.
Yep. It's over $5,000 an ounce, and here's my advice to individuals, timely advice here. I don't care if you have some gold or silver, but are we overexposed to that? So we go back to the planning piece, right? We go to our plan. We say, hey, how much risk am I comfortable with taking? And gold has historically been a hedge, but gold has also historically not been a growth asset. And so it's very important to kind of recognize the space that you're playing in, or I should say investing your money in. We're not playing in the markets, we're investing, right? So I had a client the other day called up, well, I want to buy some more gold. It's done really well. Portfolio's up X% this year. Should we get some more? And I said, well, we could, Tony. But you've got about a third of your portfolio in gold and silver right now. And I'm going to be honest, that's a little bit high. Or if we start adding to that percentage,
Oof, yeah.
I think we probably would be better off maybe taking a little bit of that off the table potentially, or at least leaving it where it's at. Because what do we do if the price of gold and silver drops now? So all of a sudden we're talking about, it's a non-correlating asset to the market. Market starts going up, it's ripping, and then gold all of a sudden starts falling. And I'm not saying it will, but it could, right? And so
gold is volatile. Like there was a 10-year period where it either didn't move or lost.
Yeah.
For 10 years. I mean, that's the problem with gold. You can have a 10-year stretch where there are no highs. I mean, we're just in a really huge high. And the problem is by the time people are calling you because they're seeing how well it's doing, saying, I want to buy more,
right.
It's too late. It's already high. Why would you want to buy when it's high?
Yeah.
When it's high is the time to maybe cash in on some of that growth and move it into something that long term has more of a chance of having long term growth, right?
And so just going back to the plan, saying it's okay to have that gold silver, we don't mind if you have it, but let's not overexpose ourselves to an asset class that traditionally in some stretches has not done as well as the market. Let's make sure we're properly balanced and allocated. So that's all I wanted to point out on that, Tony, because we're hearing a lot about it.
Yeah. The gold rush is on, and I bet you're getting a lot of calls. Anytime anything jumps that much, everybody wants on board, right?
It was NVIDIA last year, right?
Yeah, yeah. But by the time you hear about it, it's typically too late. You want to buy low and sell high. That's why you want a dollar cost average. Now,
Yep.
if you want to get more into gold and you're not really right now, you can start dollar cost averaging your way
Yeah.
in.
Yeah. That's okay.
Yeah. Well, hey, I'm glad we talked about that. Covered a lot of great topics, hot topics.
Yep.
Good show today, Andrew. Great to have you back on the show, hosting it. Thanks for having me on your show. And listeners, call 402-557-6730 for a no charge, no obligation consultation with Andrew and the team there at Premier. That number is 402-557-6730. And that does it for today's episode of the Big O Money Show with our host, Andrew Galvin.